Hey everybody, welcome to Mortgage Today for Wednesday, October 11, 2023, and oh, what a day it was. We got a lot of info, so get comfy. But MBS started the day pretty much flat, up 6 basis points, but at least it was green. S&P futures were up 12.75 points. Bonds were stronger in the overnight, almost exclusively due to a strong rally in European Union bonds. Stocks are marginally higher as conflict continues in Israel. 10-year yields were as low as 4.544, but were up to 4.57 by 8 a.m. Following the hotter PPI data, we've added a few more basis points. Core PPI month over month came in at 0.3 on a 0.3 forecast. It was 0.2 previously. Core PPI year over year came in at 2.7 on a 2.3 forecast, and it was 2.2 previously. Headline PPI month over month came in up 0.5 on a 0.3 forecast. It was 0.7 previously. Energy is up 3.3%, down from 10.3% in August. Food rose another 0.9%. Bank of America has called the current U.S. bond bear market the worst of all time. The peak to trough losses for the 30-year bond is about 50%, which is a lot. This is worse than the bond bear market of the early 80s when treasuries were called certificates of confiscation. Hedge funds continue to add to their short position, and treasuries has now reached the largest short position in history. We also got Minneapolis Fed Kashkari, and a couple of others have mentioned that they think that the recent rise in rates may have done what they needed instead of having to raise rates more times by the federal bank. Lenders are already preparing for higher loan amounts in 2024. Guaranteed Rate, Penny Mac, Man Mortgage, Rocket Mortgage. A bunch of these are now allowing files up to $750,000. A lot of these are allowing files up to $750,000. Fannie Mae is now also allowing multifamily borrowers to go to 95% LTV on 2 to 4 unit properties. This is an increase from 85% on 2 units and 75% on 3 to 4 units. This is for case files submitted after 11/18/23 will be eligible if you can find some of these properties for sale, which they are sparse. The last MBA study calculated that the total loan production expenses, including commissions, compensation, occupancy, equipment, and other production expenses, and corporate allocations and profit for the owners, were $11,000 per loan in the second quarter. We also got news that the CFPB has filed a lawsuit in federal court today alleging that Freedom Mortgage Corporation submitted legally required mortgage loan data that was riddled with errors. So they are suing them because their HMDA data was way off. This is hot on the heels of last month when they fined them $1.75 million for paying illegal kickbacks for mortgage loan referrals. We also had a 10-year auction today, which came in at 4.61 versus a 4.592 when issued. Bid to cover was 2.5 versus a 2.44 average. These results are a little soft, but that's not a huge surprise given the aggressive 2-day rally and the fact that yields were near the lows of the day at auction time. Bonds have seen only a few examples of a solid 2-day rally over the past few months. While the present example is the largest in terms of ground covered, it's also the biggest and the highest starting point from the most sharply oversold technical levels. That's the backdrop for a discussion on why bonds are still rallying. The brushstrokes involve geopolitical turmoil, global economic uncertainty, and an increasingly unanimous opinion amongst Fed speakers regarding a shift in the rate outlook and in the economy itself. All of the above is enough for the bond market to largely ignore hotter PPI data this morning and a softer 10-year Treasury auction this afternoon. We suspect that Thursday's CPI will get more attention, and it's fairly far off the median forecast. We suspect the Thursday CPI will get more attention if it's fairly far off the median forecast. That's going to come in before rate sheets are issued tomorrow morning. UMBS closed the day up 39 basis points at 98.61. Govies gained a bit more ground, but at 98.61. That is right up here in this really highly congested range, so we are at least back up into the technicals range inside of the 25 and 50-day moving averages. So hopefully that will provide an element of stability going forward.